Waiting to sell Intel. Waiting to sell Intel at 5856. This is a live day trading on the 18th of April 2019. The time in London is 32 minutes past 3 p.m. Live day trading. Are you a day trader? Are you a scalper? Or I hope this video will help you to understand the best approach one should adopt if one wants to day trade like a pro. So when I use the word like a pro, it means that one is using different time frames. One is not using only one time frame. So the method that we use is very simple. Know your setup and trade your setup using different time frame trading method. So you are looking for a good reason, a trading setup, an invitation to sell, that's the trading setup. And you must use another time frame to enter the trade. Generally speaking, we use 3 time frames. One time frame for the setup, another time frame for the signal, and another time frame for the entry. Sometimes more experienced traders can just use 2 time frames. Today, I will be using only 2 time frames. I will be entering my trade right here on a 15-minute time frame. That's where I want to enter my trade today. I like to keep my eyes on those crazy traders out there. All right, crazy 15-minute time frame traders out there. But you may say, George, where is your setup? That's a very good question. Did you ask that question? Thank you. My setup is here. It's a little bit of candlestick, blah, blah, blah. So on a daily chart, right? So we're going to go even on the monthly chart to show you more. Okay? So on a daily chart, there was this significant resistance level. That's what we see on the daily chart right now. Our resistance was at a zone of $57.63. Call it 57 or 58, okay? Now, to avoid that, look at that, to avoid that resistance, can you see that? Hold on, I want you to understand this. So when you are looking for an invitation to sell, you understand what's happening here. So that's the green line there, okay? So to avoid that resistance, the price jump above it. So you play the. It's like you put a barrier in front of somebody, and the person just jump over it. Very interesting. So we will say the bullish momentum is increasing. Yes or no? It's a bullish momentum increasing anytime the price is breaking resistance. A bullish momentum is increasing. Don't deny it. It's true. Now, sometimes we may see an increase in bullish momentum, which is in this case on a daily chart. But what followed that increase in bullish momentum? So we see an increase in bullish momentum is the price displaying higher lows, higher high. Are we seeing a bullish chart pattern? Are we seeing bullish candlestick pattern? Now look, on a daily chart, the only invitation that I received to sell is because after the price jumped above that support level in the zone of $57, all right? It went up a bit. Look, people showed it. People showed it big time. Look at that. We're going to concentrate on this candlestick bar. This one. This is yesterday. All right. We're going to concentrate on it. What to concentrate on it? What do I mean by that? Did you ask that question? Excellent. We're going to draw a line on the low of that candlestick bar. That's how we concentrate on a specific candlestick bar. And very important, the midpoint. So in case you say that you are just guessing it, we're going to use Fibonacci retracement to get exactly where is that midpoint, all right? The 50% Fibonacci retracement level, that's the midpoint of that retracement, right there. Now, anytime you are concentrating or you are dissecting like a surgeon. Are you a surgeon? A lot of surgeons trade, though. Medical people trade. I know that. Doctors love to trade. But they won't tell you in the comment section, they will keep quiet. You say, George, how did you know that? Well, sometimes I just know. Okay. So we are concentrating on this candlestick bar on the daily chart, okay? So look at that. This is the high, this is the low, this is the median line, the dark one there. Anytime you are concentrating on a candlestick bar, check where the closing price is in comparison to the median line. You see that it's below the median line. So though it's a bullish candlestick bar, it's not very, very bullish. If it was very, very bullish, the closing price will be above the median line. But again, that's not sufficient. The position of the candlestick bar that we are analyzing also counts. That's why when we are saying candlestick pattern, and I say to trader, anytime you hear the word pattern, think of what? Correct. Location. You are remembering clearly. Location. Where and when is it happening? The place, the location. So this here we are in a resistance zone, price gap above a resistance, try to escape it. Now we have a candlestick bar on a daily chart that went up all the way there, and people sold it, bullish traders that were escaping the resistance, bullish momentum increasing, but here we are, the result is that the next candlestick bar come down here. It's a little bit bearish. It's not completely bearish because it didn't close below the opening price. And it's still above that resistance. It's a little bit bearish. Just a little bit bearish. But now the next candlestick bar, which is today, will tell us how bearish it is. So this is a kind of indecision of the bullish traders. So bearish trader will spot that and say, what's going on here? So today, this was going on here. A lot of bearish traders are wondering what's going on here. They gap up above, so they took some. You see this candlestick here, the one before. We can concentrate on that again. You see the high, the low, and the median line. It closed just a little bit below the median line. This is again another indecision of the bullish traders. So take it from me. There were people here trying to sell it. Okay. I can tell you one group now, CCI traders. CCI was above what? 200. So I know that there are a lot of crazy CCI traders out there that will sell just because the CCI is so in the zone of 200. So there are some people selling here. So the reason why the price gap up, one of the reasons, because some of those traders were taken out of their trade. They created the fuel for the price to run fast. So they were pushed out of the trade, the price gap up. Contrarian traders took them out of their bearish trade. Now, what is happening next is this candlestick bar that we were analyzing. But today is a decision day. Will the bullish traders, so that's why I said to you, it's a little bit bearish. So to avoid that the price continue to go down, today the bullish traders must bring it back up. If they don't, the bearish trader who spotted what's going on, asking the same question like myself, what's going on here, will come back. They were taken out. That's what I said to you. Sometimes you are taken out of the trade. What do you do? Correct. You blink, 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 blink. All right? Or you take a very warm bath, and you put that stock on your bearish watch list because they took you out. You done everything correctly, but they took you out. Okay, good. No worries. You want your money back, yes or no? You will. Anytime you lose money, you want your money back, but you don't want to get emotional. You watch it. If there is another genuine opportunity to sell, you come back and sell the same stock, not as a revenge, but there is just an opportunity to sell, and without any emotion, you apply again your top-down trading method, and you place your stop loss, and you see what's happened. Sometimes you get your money back. Sometimes you may lose again. Now, my recommendation is that if they take you out 3 times, just go away from it. Go away from it, all right? Don't come back and fight again. Go away, all right? Some traders may come back. Sometimes we do come back, but don't go and find another financial instrument that is smiling to you. So Now you understand why I'm trying to sell here. It becomes clear to you now, yes or no? Okay, good. So we're going to go back to, so I'm using 2 time frames. So I have a good reason, which I already explained to you, why I want to sell it. And I'm using 2 time frames. Why? Because I'm an experienced trader. So you say, George, you are not. I will say to you, that's my opinion about myself. I am an experienced trader. Okay? So I sold it nicely, all right? So you may say, Joe, you didn't talk about your stop loss. I want to hear about your stop loss. Okay, for this trade, as I said to trader day trading, you see, this is why we are talking about that. The stop loss is a personal matter. It depends on the risk tolerance of all traders. All right? So generally, I like to stick to 30 pips. But the 30 pip may not be suitable to all financial instruments. Some financial instruments may demand more. I'm aware of that, depending on their characteristics. All right. Sometimes I use less. Okay. So watch the video that I title, okay, how I set my stop loss precisely like a pro. Where at 2-4 stock trader. Apology to traders. All right. So for this trade, talking about myself, my risk tolerance, okay, 30 pip. All right, it's already there. Look at that. Look at that. Beautiful. Look at that. Did you see it? I'll show you in a minute. 30 pip. 58, 86. That's the median line of that candlestick bar we were talking about. You see that thick black line? 58, 86. That's the stop loss, 30 pips. What? Nice, isn't it? But normally, in theory, somebody that is selling here, like I did now, the best place to place the stop loss is 10 pips above this level. Now, can you afford it? So now this is one of the reasons why when I was writing a TSTW24 and SYSU08, I don't bother one bit to tell traders where to place the stop loss, because every trader will learn to place their stop loss and they will develop their own stop loss trading strategy. But if you ask me now, the best place to place 10 pips above this one, can you afford it? Will that break your 5% money management rule? So now what I say to traders is that if you are sticking to the 5% money management rule, you will be all right most of the time. Okay? So your stop loss setting strategy should be dependent also on your money management rule, which is the 5% money management rule. So if I say to you 10 people bodies, okay, suppose I build a system, I say 10 people bodies, say, Joe, are you crazy? Myself personally, you say to me, I'm day trading, you say to me, all right, if you take this particular trade, the signal occur here, Joe, you must play your stop loss there. If I'm reading that, I'll say, that's crazy. But when I'm saying that's crazy, that is from my viewpoint, because I don't accept that stop loss. For another trader, that's fine. They say, yeah, exactly there, I put it there. All right, they have enough phone to do that, so they will do it. Another trader may say, Joe, 30 pips is too much. I enter my trade, all right, on the 10-second time frame, I'll use 5 pips, no more. If I push it, 10 pips. You are out of your mind, Joe, using 30 pips. So you see now the difference between the risk tolerance between myself and another trader. Can we argue about it? No. It's all down to that trader, his experience, and what he's trying to achieve. Is there, okay, a universal way to set stop loss? Maybe, but it will break down again to the topic about, okay, how do you set, okay, can you afford it? Is it suitable to your, okay, risk tolerance? In fact, I was recording a video that I titled 4 Reasons Why Setting a Stop Loss is a personal matter for technical traders. but there was some technical issue. I'm going to retry again, and when it's ready, I'll post it at 24 Stock Trader YouTube channel, another video about discussion about stop loss setting, all right? Because it's a personal matter, and that's why I recorded that the previous video that I titled "How I Set My Stop Loss Precisely Like a Pro" at the 24 Stock Trader. Check it out because I'm talking about myself. Traders have been asking me for years, all right? So you know we are already in this trade. Yeah? It's in fact in profit. We entered at 58 of 56. It's now 58 at 32, 24 pips. Not bad, is it? Not bad. All right, not bad. 24 pips. We can grab it and run away now. Okay. So we are approaching the low of yesterday. So I'll get it ready. When it comes near that low, I'll grab my profit near the moving average. Okay. 50 on the 15-minute time frame. So today I'm connecting the daily chart and the 50-minute time frame. So one of the 6 biggest day trading mistake or trading mistake is to use one time frame alone. You must use at least 2 time frame, best 3 time frame. All right, one time frame for the end for the setup, another time frame for the signal, and another time frame for the entry. Now, I have a question that I've been asking recently to traders. If you can answer that in the comment section, is it the entry more important than the exit? All right, let us know in the comment section. So, by the way, this is a live day trading in Intel. For the reasons that I've already explained to you on the daily chart, price gap up. Now we see the price closing below the median line of yesterday. What's going on? So the alarm is ringing, inviting me to look for an opportunity to sell. Now I'll change time frame quickly instead of using daily. So let's go to the hourly time frame. So here it is. This is the hourly time frame. So yesterday, look at that. On the hourly time frame, look at that. CCI was well overbought. Now we see a pin piercing through the median line of yesterday. This is a typical candlestick pattern, a pin candlestick bar with a long shadow piercing through the median line of yesterday. That's what I see on the daily chart. And now look at this. Okay, we can also argue that George and also that common sense line is broken. You see, one up, one down. One up, one down. You see, down that candlestick pattern here on the hourly time frame. So all this shadow here tell me some people are selling also. So if you call this as a signal on the hourly time frame, in normal condition, we should drop down to the 10-minute time frame. You come to the 10-minute time frame, you want to sell, what do you do? Draw a line, draw a trend line. We can draw a common shiny trend line along here on the 10-minute time frame. And people are selling on the 10-minute time frame on the edge of this trend line here, this one. Not bad place to sell now. 58, 56. Now you understand why some people are taking profit here, because they are buying also here. You see here, they are buying here, they are buying here, they are buying here on the edge here. You hear they buy. You see, this is a bullish engulfment here. All right, pushed up. That's yesterday. Okay, so all right on the 10-minute time frame. So now they are going back up again. This is what I hate when I'm day trading. All right. So if you break below that channel, which I'm expecting in normal condition, so I may get paid correctly. So because if I'm risking 30 pips, I want at least 30 pips out of that trade. I could, but because I'm talking to you guys, all right. All right. We break below it, we'll be watching this level here coming down a little bit below the low of yesterday. If we come to 57.92, that's good, isn't it? That's good for bearish traders. All right. So I've been talking to you now for 20 minutes, my friend. You understand why I'm selling it. You see how I did my different time frame trading method using only 2 time frame instead of frame. Okay, I show you quickly what's happening on the hourly time frame and 10-minute time frame if you want to do it in a proper way, daily chart, hourly time frame, 10-minute time frame. But the most important thing about the trade that one is trading, whether one is swing trading, day trading, or position trading, or investing, the most important thing is what? That invitation card, when you come to the door, right, and the security are standing there, they say, "Oh, who invited you?" You say, "Oh, George invited me." You say, "What is your invitation card?" You don't have it. Or they look to the list of the guests that are invited, they can't see your name. Well, you're not going to enter, isn't it? Unless you have my mobile phone and call me and say, "George, I'm at the door and the security is giving me a hard time." You understand? So the most important thing is what? The trading setup. Find a very good trading setup, very bullish or very bearish, and now concentrate on the top-down trading method. Apart from those 2 things, the market environment is very important, but we don't want to talk about that today. So as I've been talking to you now for 21 minutes, all right, I'm going to pause the video, but before we pause it, all right, because we don't want it to be too long, we don't want it to go over 30 minutes. A live day trading can take long than if you are watching a live trading video, you see 30 minutes, it's longer than that, okay? So we will pause the video at this junction. The price now 58.39, nicely below my stop loss. Yes, that's correct. And I'm expecting to get I'm expecting to go down a little bit more before we wrap it up. So to avoid that the video is too long, with your permission, let's pause the video for the first time, all right, and we'll come back to it. If there's something interesting happening, or if I'm about to close it and wrap it up. So attention to the vertical turquoise line. That's the point where we are pausing the video for the first time. The time in London is 55 minutes past 3 p.m. on the 18th of April 2019. So pausing the video for the first time, and I will speak to you soon after 22 minutes recording. Speak to you soon. Okay, traders, the price now at 58.26. It went down to 58.24. All right. So this is it. There are people buying near the low of this channel on a 10-minute time frame, wasting a bit of my time. All right. So all in all, okay, this is a successful trade. Just to explain to you, okay, how to day trade like a pro. I hope it has been useful to you, that you have learned something from it that can help your day trading, all right? If you have any questions, suggestion, complaint, lament, blah, 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 put them in the comment section, and of course, I will be recording another video to answer your specific question, all right? If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share with your friend on Tumblr, Facebook, Twitter. All right. To learn more about day trading, go to www.stochastic-macd. Subscribe to our YouTube channel. Our YouTube channel is 24 Stock Trader. Digit 2, digit 4, a stock trader. Be sure to click on the notification bell, so anytime we record a new video, you will be the first person to be notified. The financial instrument that we are analyzing today is Intel Incorporated, belonging to the technology sector, semiconductor. All right. Thank you for watching, and I will speak to you soon. We are the GSTW at 24 traders talking about live day trading in their stock using a different time frame trading method. Happy trading to you all, and I will speak to you soon.